Hey there, savvy investors. Welcome back to CHAT ETF, your go-to channel for cutting-edge insights into the world of exchange-traded funds. I'm thrilled to have you with us today as we unpack some truly exciting trends in the market. We're talking about the phenomenal rise of emerging market ETFs, the steady flow into US ETFs, and the enduring growth in developing nation earnings forecasts. If you're as passionate about ETFs as we are, don't forget to hit that subscribe button and join our growing community. Now, let's dive deep into today's episode. In a testament to the resilience and attractiveness of emerging markets, exchange-traded funds (ETFs) focused on these dynamic economies have witnessed a remarkable surge in investor confidence. The year has seen an impressive milestone as emerging market ETFs have exceeded $10 billion in inflows. Notably, this surge is accompanied by a consistent trend of net deposits into U.S. exchange-traded funds for the third consecutive week. Furthermore, the positive momentum extends to developing nation earnings forecasts, marking the eighth successive week of growth. The soaring attraction of emerging markets. Emerging markets have long been recognized for their potential for high returns, offering investors access to economies with strong growth prospects. The significant inflow of funds into emerging market ETFs underscores investors' growing appetite for exposure to these regions. The $10 billion milestone not only signifies a substantial vote of confidence, but also reflects a broader trend of strategic allocation to diverse and promising markets. Consistent net deposits into U.S. ETFs. The surge in emerging market ETFs is complemented by the third consecutive week of net deposits into U.S. exchange-traded funds. This trend indicates that investors are not only diversifying into emerging markets, but also maintaining a keen interest in the stability and growth opportunities presented by the U.S. market. The concurrent rise in both emerging market and U.S. ETFs suggests a balanced approach, emphasizing the importance of a globally diversified investment portfolio. Steady growth in developing nation earnings forecasts. The positive sentiment extends to developing nation earnings forecasts, marking the eighth successive week of growth. This steady upward trajectory reflects the improving economic fundamentals in emerging markets. As these economies continue to recover from the challenges posed by global uncertainties, investors are increasingly optimistic about the profit potential offered by companies operating in these regions. Factors driving the trend. The surging popularity of emerging market ETFs and the sustained interest in U.S. ETFs are propelled by a combination of factors that underscore the dynamic nature of global investment preferences. Higher returns and diversification potential. Emerging markets attract yield-seeking investors. Emerging markets traditionally offer the potential for higher returns compared to developed markets. Investors, in search of enhanced yield, are drawn to the robust growth prospects and expanding consumer markets in these economies. Diversification benefits. The allure of diversification plays a pivotal role. Investors recognize the importance of spreading risk across different asset classes and geographical regions, with emerging markets providing a valuable component for achieving a well-rounded portfolio. Resilience of the U.S. market. Stability amid global uncertainties. The sustained interest in U.S. ETFs reflects the resilience of the U.S. market amid global economic shifts. Investors view the U.S. as a stable anchor in their portfolios, especially during times of uncertainty. The country's well-established financial infrastructure and regulatory environment contribute to its attractiveness as a safe haven. Global economic recovery. Positive outlook for developing nation earnings. The consistent growth in developing nation earnings forecasts is closely tied to the broader global economic recovery. As economies rebound from the challenges posed by the pandemic, emerging markets are poised to benefit from increased consumer spending, rising commodity prices, and improved trade conditions. Interest rate environment. Low interest rates driving risk appetite. The prevailing low interest rate environment in many developed economies encourages investors to seek higher returns in riskier assets. Emerging markets, often associated with higher volatility, become more appealing as investors look beyond traditional low-yield options. Technological advancements and accessibility. Efficiency of ETFs. The structure of ETFs, with their low costs and easy tradability, aligns well with the preferences of modern investors. The technological advancements in financial markets have facilitated easier access to a diverse range of ETFs, allowing investors to implement their strategies with greater efficiency. Government policies and reforms. Favorable policies in emerging markets. Government policies and reforms in certain emerging markets, aimed at improving business environments, attracting foreign investment, and fostering economic growth, contribute to the positive sentiment among investors. Proactive measures to create investor-friendly environments enhance the appeal of these markets. Global trade dynamics. Trade opportunities in emerging markets. Evolving global trade dynamics and the reconfiguration of supply chains have opened up new opportunities for businesses in emerging markets. Investors recognize the potential for companies in these regions to benefit from increased international trade and cross-border investments. Investor strategy and outlook. As investors navigate an ever-evolving global landscape, a strategic approach to portfolio diversification becomes paramount. The simultaneous growth in emerging market and U.S. ETFs suggests a nuanced investment strategy, combining exposure to dynamic economies with the stability offered by established markets. Investors are likely to continue seeking opportunities in emerging markets while maintaining a prudent approach to risk management. Conclusion. The surpassing of $10 billion in inflows into emerging market ETFs this year, coupled with the consistent net deposits into U.S. ETFs and the sustained growth in developing nation earnings forecasts, paints a positive picture for global investors. The current landscape underscores the importance of a well-balanced and diversified investment approach, leveraging the strengths of both emerging and established markets. As we move forward, monitoring the trends in these ETFs will provide valuable insights into the evolving dynamics of the global investment landscape. And that wraps up another deep dive into the world of ETFs here on CHAT ETF. We hope you found our exploration of emerging market ETFs, the consistent interest in U.S. ETFs, and the encouraging earnings forecasts insightful for your investment journey. If you enjoyed today's content, give us a thumbs up, share it with your fellow investors, and make sure to subscribe for more expert insights into the ETF landscape. As always, thank you for joining us, and we look forward to chatting ETFs with you in our next video. Until then, happy investing from all of us here at CHAT ETF.